Hi, my name is Jennifer Reed. I'm the Vice President of Public Relations at Sound Credit Union.
And I'm Tammy Atoigwe, and I am the Vice President of Consumer Lending, who actually provides a lot of credit for our members. So thank you for having us, and I'm really excited to do the presentation today.
Yeah, so one of the things we try to do at Sound is make sure that we're connecting with the community and providing resources for people that really understand how they're using their money, understanding credit, right? How many of you have a credit card, a checking account, savings? Yeah, that's awesome. That's so great to hear, because we all need to have checking accounts. We need to be putting money away to save, but at the same time, we need credit, right? Because whether it's to purchase things for around the house, clothing, things like that, or if we're looking to buy a car, purchase a home someday, pay for school, all those things, we need to start building our credit so we can assist with that and make sure that you have the tools and resources you need to be successful. But the main part that you want to come away from that when you're given that credit is building the responsibility of understanding how you're using the money and not overextending it, right? Has anybody gotten into credit card trouble where they've gone over their spending and it's kind of spun out of control? You don't have to raise your hand. I can tell you, I, for one, did that as soon as I graduated from college. I graduated from college.
My hand. I did that as well.
Yeah, I moved to San Francisco, and I thought that, I'm really old, and I thought the money I was going to make at that point was a ton of money. And I found out quickly, living in one of the most expensive cities in the nation, it's not that easy. And so I had to begin finding tools and resources to help me manage that. So that being said, we're going to talk about understanding your credit reports and your credit score. How many people have checked their credit report before? Good. That's awesome. We'll go through all of that today and talk about it. Let me make sure this is working.
Do we need to point it over here maybe?
Hisuk, we may need your help. Yep. Nope.
Maybe we can go here.
It was working earlier.
Right.
Okay.
Technology.
Okay, maybe ran out of
Here?
Oh, yeah, just
So I'll go ahead and get started. So things that we're going to touch base on today is understanding how to obtain your credit report. Where do you go look? How can you access it? Understanding if you get a credit. Here we go. Okay. So why it's important to understand credit, what's on your credit report. So what's creating that credit score that you receive, or what is kept on that credit report, how to obtain that credit report, how it's calculated. Has anybody ever gotten their credit score from a different bureau and it doesn't match? That's because they have different calculations. So we're going to go over that a little bit today. We'll go over some myths that you hear about surrounding credit. And then at the very end, we'll talk about tips of how to use credit wisely, because you're all young. And if we can reach out to you and connect with you and help you understand how to manage your credit, hopefully that's a success in our eyes. So
Absolutely.
So, okay, why is credit important? So what do you need credit for? You need it to buy a house, buy a car. What about anybody ever apply for a job and find out that an employer is looking at your credit before you apply? Those are things that they're looking at. So credit is important in order to buy goods and to achieve your goals. So landing your dream job, we go into that. 35% of employers are looking at your credit history. So they're not looking at your credit score, they're looking at your history. And why are they doing that? It's helping them see where you are with responsibility. So if somebody is giving you credit, how are you managing that? Are you making your payments on time? Are you spending out of control? Are you, so they're seeing those characteristics that you have showing responsibility. Those are one of the things that they're looking at. There's a statistic out there with TSA. They are an employer that when they look and they look at someone's credit report, if they see that they've gone to collections and they have $7,500 outstanding in collections, they won't hire you until you have a plan in place on how to manage that debt. So one, that's awesome that there's an employer out there that's making sure that their employees know how to manage their money. But two, again, it's looking at your characteristics and making sure that you're managing things right. So Next slide. And it's frozen.
Maybe. There we go.
Okay, so renting or buying your own house, that's another thing that credit's used for. So how many of you are renting right now? That's fabulous. And before you did, you had to provide information about how a landlord could look at your credit, right? Because they're needing your social security, date of birth, all those things. So you put in that application, they're looking at that to look at your characteristics. When you're going to buy a house and other things, auto loan, anything like that, your credit score and your credit report are going to play a role into the interest rates and whether or not you are available, or whether or not you can get the lending appropriately for those items. Getting a loan when you need it. So when you go to get a loan, a great example, recently my husband and I, we're not going to sell because interest rates are too high on our house right now, right? So we're like, okay, let's go and look at a HELOC home so that we can do renovations on our house if we're going to stay there. Well, it's nice if you have good credit because then you get access to those funds quicker. Lenders are going to look at your characteristics, they're going to look at your history and see that, and then they're able to determine and much quicker whether or not they're able to lend you that money. So we have an example here of two people. This is Diego and Angela. They're a great example of two people. They have when a creditor is looking at their accounts, they both have the same amount of their income's the same, and they have stability in their jobs. So everything on paper looks good, but the difference between the two is you see that Diego's credit score is 660 and Angela's is 750. So that difference in credit scores, 750 is considered good.
Absolutely.
Yep. And 660 is okay, but room for improvement. But you can see the difference in interest rates, and 1%, a little less than, I guess it's 0.75% difference there, a little bit more, 1.5, I guess, is the difference there in credit scores. No, 0.75. Sorry, my math's real bad today, guys. But their interest is different. It may not seem like a lot, but I don't know about you. With inflation, I need an extra $100 every month right now. Right. And so when we're looking at their monthly payments, Angela is able to save $100 a month because her interest rate's lower, which all plays into the fact that she had a better credit score. Again, same income, same stability in their job, but what characteristics played into this? Was Diego not making his payments on time? Is he overextended in credit? Those are things that come into consideration. But at the end of the day, besides just the monthly payments that they're looking at, their mortgage paid over 2 years. If you hit the next slide, Tam, Angela saves $34,000.
That's a lot of money.
That's a lot of money. That's a new car, things like that for you to think about. Savings for your future. It's money that you could put into retirement, money that once y'all start having kids, money that you can put towards childcare, saving for college for your kids, things like that. So,
or even take a nice vacation, because after school, you're going to need it.
After school, you'll need it, or
Right.
when it's just winter and it's 34 degrees out.
Right.
Okay, next slide. Do y'all have any questions so far? Okay. And if you do, or you have anything you'd like to add, please know that we're open. Let's share stories and talk about things as we go through everything. So what's on your credit report?
Are we on slide 10? All right.
Sure.
So what's on your credit report? Before we get started on the ins and outs of credit reports and scores, it's important to take a step back and really consider why credit is important in the first place. And kind of on the flip side of that, right? If you have damaged credit, what areas of your life do you feel like that could be affected?
Everything? Yeah.
Everything? Yep. Yep, it really can. Car insurance rates, auto loan interest rates, whether you can get a job that, a dream job that you've been wanting and working really hard for. So it's really important to take the time and really understand what your credit report is telling you. So there are 3 major credit bureaus, and I'm not sure if you've all ever heard of all 3 of these, but we have TransUnion, Experian, and Equifax. So when it's time to apply for credit, different financial institutions will pull a different type of bureau typically. So they don't pull all 3 unless you are applying for a mortgage. And at that point, they really will most likely pull all 3 credit bureaus. So it's important for you to understand what those scores are so that you have an idea going in of, what types of interest rates that you can be expecting for the outcome. Kind of on the flip side of that, different bureaus can pull different types of scores. So we have a FICO score, a Vantage score, and all those models can produce different types of credit scores. So you just want to be aware and make sure with the lender that you're working with, and try to find out this information so that you can go to that bureau separately and see what is reporting, because not every single financial institution reports to each bureau. A lot of times smaller financial institutions will just maybe report to only TransUnion or Experian. So a lot of times what you will see is you'll have a trade reporting on TransUnion, but then you pull Experian and then you don't see that trade. So it's knowledgeable for you to understand what's out there, what's on your credit report specifically.
And when the lenders are reporting to the bureaus that they're selecting, they are reporting every single month. So anybody who's late on a payment or anything like that, that is going back to them every month.
Right. What kind of one of my tips, that's not in the slide, but one thing that, like, I have 6 kids. And so when I tell them, if you do for some reason have to max out your credit card by the end of the month, either try to pay it at least half down, 70% down. So that way, once it does get reported to the credit bureau, it looks like your availability is much larger. And that will in turn help increase your credit score.
So what's on your credit report? So what they're looking at, your personal information. So this is your name, your social security number, date of birth, address, all of those things are going onto your credit report. So your personal information, your credit accounts. So any accounts that you have open, that's not counting your checking account. They're looking at your credit accounts. So any credit cards, student loans, auto loans, those are showing up in there. Anything that's gone to collections. So that includes healthcare. So like if I have a bill that didn't get paid, or maybe I'm in a dispute with the insurance company, those things that should go to collections, those are going to show up there for a period of time until you pay it off, or if it goes in to further issues with the collection agency.
Yeah, one thing I would note with typically for medical collections, if you make a phone call to them and make any type of arrangement, that will prevent that. And you make sure you're making the payments that you agreed upon with the creditor, with the medical provider. Typically, they will not send it to a collection agency. So it's really important to be in front of that. So that way, because once something gets on your credit report, it can be hard to get it taken off or reporting the way that it should be accurately. Easy to get put on, harder to get taken off. So keep that in mind.
And not just with healthcare, that's with your financial institutions too. If you get into a bind and you need help, being honest and straightforward with them, picking up the phone and having a conversation before payments are late or anything like that, your financial institution is going to work with you more than they are if you didn't take the time to make the call, because they see you being responsible, taking action, and wanting to take care of the situation you're in.
Yeah, and I can speak firsthand to that. I'm on a credit committee at Sound Credit Union where we look at people who are in financial distress. And when they come to us and ask for help prior to where it gets to the point kind of where, they're in dire need, instead of letting us know ahead of time, hey, this is where I'm at, we always will help our members. That way, they don't get to the point to where it gets so overwhelming, they just kind of check out.
Right. We want to help. That's what your financial institution should be there to help. Mobile bills and things like that. Yeah. So if you're not paying them or anything like that, they'll report you to collections. So that would show up there.
Yes.
Yeah. Yep. So, and then public records. So, Tam, can you touch base on
that? So public records, I mean, it just kind of depending, but it could be bankruptcy considered a public record. Let's say if you rent an apartment and you end up owing damages for that apartment when you leave, that goes on your public record as well. But really bankruptcy, Chapter 7, Chapter 13, that will stay on your credit report for up to 10 years. So I mean, that does follow you for quite some time. Yes, you can repair it, but it is in there for quite some time. Yes.
So what's a good debt to income ratio to keep, like, when, because if it is going to be on a credit report,
So honestly, that really depends on what your income looks like. Okay, so let's just say I'm making $2,000 a month, but my debt ratio is 50%. But Jen's making $20,000 a month and her debt ratio is 50%. She has much more funds to play with than I do. So it kind of, it's a determining factor, but 35% and lower is what typically lenders like to see. Mhm. Yes.
Great question.
Yeah, thank you.
Yeah, and inquiries. So inquiries would be when lenders are reaching out to look at, someone's credit report. If you're looking to get a credit card, every time they're touching your account to look at your credit, those are inquiries that are showing up there. Anytime that you're trying to access more funds, those inquiries are going to show up on your report.
And which those are typically called hard inquiries, which will stay on your credit report and your credit history. Now, there are such things as a soft credit inquiry, which does not make it a hard, so it doesn't stay on your credit report. And so it does not affect your credit score. So we do have a lot of lenders now that will offer a soft pull. That way, if you are interested in trying to see if you would qualify for something, that would be my recommendation, to work with a lender that does have a soft inquiry access to see if you would qualify.
So soft inquiries are when employers are looking at your credit. If you're opening a checking account, that's what when someone comes into our institution to open a checking account, we do a soft inquiry to see if there's any outstanding things with collections and things like that. And then we're going to walk people through how to manage those. But that's just a soft inquiry.
Exactly.
Yes.
Yes, mortgage would be a hard inquiry. Applying for a car loan, a credit card, those would all be considered hard inquiries. Yes.
Anytime you're trying to get financing, that's going to be your hard inquiry.
Yes.
Yeah. So, but with credit reports, you want to stay positive with the activity. The positive activity is staying there. So if you're making payments on time, if you're keeping your credit cards open but not utilizing them, anything like that, that's okay. All that positive information is going to stay on there. The negative stuff will stay on for a while too. It does fall off eventually if you're taking care of your credit, but you really want to have that positive payments on time, the amount of utilization of your credit cards, any of the accounts that are open. You want that to stay on your credit report because that's building that character that lenders are looking at.
And one thing to note as well, sometimes, like Jen mentioned, both of us, when we were in our younger years, we went over our credit limit, right? And so that is always going to be notated on your credit report. So it'll tell the creditor that your limit was 5,000, but at one point your balance was 5,100. That will never leave your credit report. So you always want to just be very careful that you're staying within those limits to avoid having that permanently stay on there.
So obtaining your credit report and how to do it. So some of you have obtained your credit report before. How have you done it? Anyone? Yeah. Credit
Perfect.
Karma. Yeah. And okay, perfect. That's great. Yeah. Bank of America, because they have it on every month, right? You can see what your credit score is. Some financial institutions will have that. Those are all great options. We'll go through a couple here, but annualcreditreport.com. Anybody heard of that? So you can access your credit report on there. It used to be once a year for free. You can access it since the pandemic every single week until they tell us we can't, but you can do it every week, and you can receive your credit report from all three bureaus. But know that if you want to access your credit report, so you're looking at all of the accounts that are open under your name, it will give you that. If you want to get your credit score with it, you have to pay for that. So it's like $6 to $8 if you're going to pay to get your credit score.
Kind of on the flip side of that, though, Credit Karma will allow you to get that credit score as well as the trades for free. So keep that in mind too.
Yes.
That's correct. Mm-hmm. That is accurate. So currently at Sound, we use the Vantage 4.0 score. So it just depends on what type of lender that you're working with. The most common right now is the FICO score, which, that's quite a bit of an older model. The Vantage score is coming out. It has more predictability, uses more AI intelligence to kind of see maybe what's going to happen in the future with what they've seen already currently on the credit report.
'Cause
Sure.
they're looking at your transactions and how you're managing your funds.
Yes. They're different models. Yeah, so TransUnion, Equifax, and Experian have multiple models that you can choose from in order to, it depends on what best fits the financial institution. So we actually go through great lengths to do discovery, look at the models, what we feel would work best with our membership within our area. And it's quite a big undertaking. The last time we did it, which we moved from FICO to Vantage 4, that was probably a year process that we looked at all the data. We ran our membership through, could we have approved more people with the Vantage score, which that's why we ended up changing, because we want to be able to help our members more, get them in better loan rates. And we felt that model was going to do that for our membership, and it really has.
And remember that not all of the lenders have to report to every single bureau, right? So that calculation is different. So that's why your score might be 725 over here and then 710 over here. At my house, it's a big competition to see whose credit's higher.
Same.
It's always a big, and my husband, he's welcome. I'll tell you his story in a minute.
Yeah, we call it the 800 Club at my house.
It's a big deal.
Yeah. So kind of to touch base what Jen said, though, maybe a smaller financial institution, a smaller credit union will probably only report to one credit bureau. So that's why you might see that discrepancy too. Yeah, you bet.
So you can have them obtain your credit score. You can ask them to send it to you in the mail, but let's be honest, nobody in this room is probably going to do that. You're all going to have them send it to you via email. So that's really easy. You can also call them and ask them whether you go online or not for annualcreditreport.com. So
that is information. Oh, you do have the slides already, so that's perfect.
Yeah.
If you have, I need to reference that.
And then so this goes back to what I was saying, $68. I jumped ahead, but that's what it would cost if you went to annualcreditreport.com to get your score. But if you have a bank account, look and see if your financial institution's offering that, like Bank of America is every month. That's a great feature. And really important. And whether or not you're doing that or to access your credit report, you can, if you want to protect your identity, right? Because that's a huge problem in this country and the world for that matter. You can set it up so that you pay $3 or $4 or $5 every month to manage your account, and they'll send you an email and tell you. So I do this with Sound. So my husband and I have it set up. So does my son. And every month I get an email that tells me that our credit looks the same. Nothing's changed. And if it has, somebody better have tried to apply for credit in some way. If not, then I know it's an alert. It's a red flag and I need to go and research that further. So look at those tools that are out there to help you.
And there are tools also that do not cost money. So what you can do is you could put a statement on your credit report that states, please do not allow anybody credit in my name unless you contact me at this phone number to confirm that this is who is actually applying for credit. We actually had a non-member yesterday apply, and that statement was on the credit report. We contacted that member and said, I was never in that dealership applying for credit. So, I mean, there's a lot of fraud out in the world. So those are some really good tools to help protect yourself.
Absolutely.
Sure.
Who do you contact?
Depending on what bureau. So you can go to Experian directly, TransUnion directly. You do have to do it to all three, yes.
And you tell them that you want to put a credit freeze on your account.
Or a credit statement, depending on what works best for you.
So filing a dispute. So if you run into a situation where your identity has been compromised, or if you look at your credit report and you see there's an account that's on there that's not yours. This happened to my husband and I when we went to go buy our first home. He had not been good about taking care of his credit and looking at it. And there was another John Reed that was on his account, and it had no relationship to him. And that person had been sent to collections, and we weren't going to be able to move forward in the process until he filed a dispute by reaching out to the credit bureau. Well, first to the financial institution that was claiming that this was his account, and then touching base with the bureaus. It was a long process. And as you're trying to get access to this funding for a home or an automobile or anything like that, it just adds on time. So it's really important to look at that. So filing a dispute, filling out the correct paperwork, talking with the creditor or the agency about what's taking place and how to manage that. What do you need to do? And then you're going to reach out to those bureaus. You're going to say, this is what happened. I've talked to the financial institution. They've confirmed that this isn't my account. But what you really want to make sure you're doing as you're going through this whole process is writing down every single thing that you do, finding out who you spoke to, what time you spoke to them at, what was the outcome of that call, because you're going to want to give all of that information to the bureau so that they can go and fight on your behalf.
Yes, and typically right now, what we're seeing with sound is, we like to see a police report filed. That way it can be documented with, your local government as well.
And then you can also go out to the Consumer Financial Protection Bureau, and they can help you with this. And you can file everything through that as well. And then we talked about identity theft, that it all applies the same way. So we've kind of touched base on that. Does that all make sense to everybody?
One thing too, I wanted to note is, if you're in a position right now where you may be struggling with your credit score, or you really don't know where to begin, we are here to help you. Never be ashamed of the current situation you're in, because you could always work hard to get out of that. I know at a time before I started working at a financial institution, it was difficult, and it can seem embarrassing. You're not the only one, you know what I mean? So it's okay to be open and have that conversation. Your bank or your credit union is here to help you. So sit down, have that conversation, see what might be best, for your situation to help try to get your score increased.
We talked about a credit freeze or what was
Or a
it?
statement.
Or a statement
Credit
that you can
statement.
put on with all three bureaus. So you want to do that. And then filing, if you do run into identity theft, filing with the FTC at identitytheft.gov. So all of this is in the slides for you. And those are just steps you're going to want to take. And like Tammy said, make sure you're filing with the police department and that you have that. So now how are credit scores calculated? So we've gone through, there's a couple different, we're going to touch base today on FICO scores and how those are calculated, because it's the most popular one that's out there. And you've all heard about that, right? Everybody's familiar with a FICO score? Kind of. Okay, well, let's touch base on that. So a FICO score, it's calculated when the financial institutions are reaching out and reporting to all the bureaus. And then each bureau has their own calculation where they're adding in this algorithm that comes up and pulls all your information in there. And then it spits out a score. And with a FICO score, it's a 3-digit code. So, or a 3-digit number. So anywhere from 300 to 850. But note, if you don't have any credit, your credit score would be 0. So you're all young. My father-in-law's 85 years old and he doesn't have a credit score because he hasn't had a house payment or anything. And my mother-in-law has everything in her name. So they went to go purchase a vehicle one time and he has no credit score. They're older, God bless them. They think that if he writes a check, he's going to get a credit score. That is not the case. Again, a credit score is based off of funding. So funding on a loan that you have been given. It has nothing to do with your checking account.
Right.
So FICO score is the most widely used, but Tammy, are we seeing more and more people go away from FICO to Advantage?
And one thing that I have noted as well, FICO is increasing their cost for their score. I'm going to say quarterly. I mean, it's pretty outrageous that the fees that they are charging in order to obtain a FICO score. So I think they're kind of pricing themselves out of the market. So I really think we'll start seeing more people going over to the Advantage or whatever other bureau or model that they feel appropriate for their company.
So credit score factors.
Yes. So
yeah,
sure. It does not.
Nope. Because that would be Venmo or PayPal that's taking money out of your checking, right?
Yeah.
They do credit, but yeah, that's not pulling into all of that. And you would have to have funding with them for it to
Which
go
they
in.
do have those options too.
Mhm.
Okay, so there are actually 5 factors that go into the calculation of your credit score. Do you know what those 5 factors are that might impact your credit score? Go ahead. You're hired, come
Yep,
on.
yep. You got the 2 most important
Yeah,
ones.
That's
Mhm.
awesome.
Great work.
Okay, so there you go. 35% of your credit score comes from the payment history. So you always want to make sure that you're making your payment on time. If for some reason you can't pay a larger balance, make sure you're at least paying that minimum score, the minimum payment. That will help keep that that piece of the pie consistent and keep that score up. Next, we're going to talk about payments owed or amounts owed, which is actually consists of 30% of where your credit score comes from. So the largest impact on your credit score, which is the payment history. Sorry, let me get my slides here, my notes. Is the amount of credit that you are using versus what is available to you. So the rule of thumb is to target only using 30% of your available credit. So if you have $1,000 limit, you would like to try not to go over $300 because that just tells the credit report that you are responsible, not trying to max out, and that's an easier amount to pay off monthly, so it doesn't get to the point where you can't afford your payments.
And they don't tell you that when you get a credit card, right? You don't hear that. So it's really important to remember that and teach yourself how to manage that.
Next one, 15% is going to be the length of your credit history. So the longer you have established good credit history, the more trust you have built up. So I have a card, I think I want to say from 1999 that I do not use, but I keep open just to make sure that that average length of time that I've had trades open still reflects back to that original trade. So that's something I would recommend to you. You're probably all newer to credit, but if you do have cards, that are open from some time ago, try to keep that one open to keep that length.
So they always tell you, don't have so many credit cards
Mhm.
open and close the ones that you're not using. So isn't that a contradictory to what you're saying now?
It can be. So what you have to be careful that you keep the longest trade open. Okay, so if you have, let's just say you have 10 credit cards, typically that seems to be quite a bit. I mean, maybe 3 to 5, maybe more reasonable. Yeah, so you may want to maybe close some of those that with a lower limit, close those ones, and then ones that are maybe more newer opened, if that's in the position that you're in.
But remember that if you close it, then that credit history goes away. And that's the hard part. So before closing it, and I've done this, I've had a Nordstrom credit card and my husband's like, that's going away. He cut it up and it's gone. I have one. I haven't used it. And but it kept my credit history there. So
Does John know
take,
that?
yes, but you take it out, you take that physical card away, or you remove it from your Apple wallet so you don't have the funds there, that it's just easily obtainable. Like if you have to use that money or that credit, you go and have to do something to get it.
So you're not penalized if you just leave it open and just let it
No,
sit there?
no,
Okay.
that can help get your score
Because
up.
say you got into credit card debt and there was $1,000 on that credit card and your limit was 1,000, and then you struggled to pay it off, and then you showed that you paid it off and you were responsible with it, and now it's at 0. All of that history stays there.
Question?
What happens if the financial institution closes it because
That is actually, a lot of creditors are doing that currently, because they want to have those available funds that you may not be using available for people that do want to use them. So they do have a right to do that. So my recommendation would be go make a small purchase so that way it looks active.
So that is one thing that people say, is that use that card once a year, or set it up for an automatic payment every month. Maybe it's your cell phone bill, internet, something like that. And then it's automatically paid off. And then you're showing that you're responsible with that money.
Does that help?
Good questions.
Question?
Hisuka.
Right.
Yeah, that's
No,
great.
that's very
Yeah.
true. A lot of card companies do charge an annual fee. Sound no longer does that. So my recommendation to you would be to do your research and
Mhm.
make sure that's a card that, find one with no annual fee. I think that would be your best option. Sure.
For credit utilization, that we put it up 30-35%,
Mhm.
roughly between there. Is that overall credit utilization between 3 to 5 credit cards, or is
Right.
that 30% of each one?
Total accumulation of how much you have available. So out of each of your cards.
And honestly, but it's all of them, right? So if it is 3 to 5, don't go over 30% on all of them.
Question?
So I've always been taught to have a credit card with like a major bank
Mhm.
as well as have ones with like a credit card.
Mhm.
Never knew the reason why.
I know that there's a lot of times people like to see different styles of credit. So secured, like an auto loan, a home loan, credit card. I have never heard that statement before.
One with the credit union, BDC,
Thank
as
you.
well as
Good.
too.
Good,
That's
good,
great.
good. And if those are both working for you, that's great. I've never heard, I don't know if that's a myth, but
Yeah, so we're gonna go over it in a little bit, but what they're looking for is that you have an assortment of credit that you're utilizing. So if it's a credit card, personal loan, auto loan, they're seeing that you have a mixture of credit that you're using and that you're being responsible when you're managing it.
question? She answered it. Okay, great.
Great questions, y'all.
Okay, so and then 10% for new credit. So if someone's applying for too much credit, that's really it's a red flag. Why are they having to apply for so much? What's their intent? Are they trying to stack credit to where they get a lot of available, charge it all up, and just leave the debt? We're seeing a lot of that in our market right now, which is really scary. It just really is a red flag. So we just need to be aware of that. So if you do plan on getting a credit card, do your research and really know what card that you're interested in before just applying for several different ones.
And make sure you can manage the funds that you're given based off of the income you have coming in.
And then on the flip side of that, if you are auto shopping and let's just say you found a car at Sunset at a Ford dealer, but then you found one at a Chevy dealer. If those inquiries are done within like a 7-day period, it does not affect your credit as much as if you're applying for unsecured debt. Okay, so they kind of think of that as more of maybe a one inquiry if it's done within 7-day period.
I was told it was 45 days. That's not
45 days for
for like shopping, cars, or home.
homes, maybe a little more in that arena. I know for credit cards, it's going to hit you as a hard inquiry each time, but auto, it's typically on average around 7 to 10 days.
I learned new things too. I thought it was longer, but that's great. She knows that's her department.
And then the credit mix, kind of like Jen just touched base on, you want to make sure you have a mixture of credit, closed-end personal loan, a revolving, an auto, a home loan, or rent. They want to make sure that you are confident with making all the payments of these different types of creditors. So based off of all of that, those are all the ones that we just went over. Any final questions on that piece of it? Sure. You can have as many as you want that you can be approved for. However, that with those inquiries on your credit report and without a mixture, it can really bring your score down. So you would want to maybe have just maybe a few, like a handful of credit cards. I'm an expert at sound, right? But I can't tell you overall and give you like legal advice, but it's best not to have too many. Question.
Mhm.
It just depends on what your overall credit history looks like. Do you have other cards that are open currently? Is that maybe one of your longest trades that have been open? I think I would just cut it up and not use it.
It's not going to hurt you. And then if you need it, then you're going to call them, right?
Yeah,
Yeah,
you
great
bet.
questions.
All right.
So now we have another example to look at on how a credit score is calculated between Angela and Diego. So Diego has a credit card balance of $800, maximum limit's $1,000. He pays his balance every month, but Angela has a credit card balance of $5,000, maximum limit of $10,000, and she's making the minimum payment every month. So then if we look at, excuse me, if we look at,
Want me to go back?
Nope, go ahead.
Okay.
You can skip forward.
There you go. Sorry about that. One more.
And one more. Oh, so sorry, I was wrong. I thought I was going to show something on the bottom.
Okay.
Basically, if we look at these two, if we go back one, Tim, sorry.
You got it. No
If we
problem.
look at it, because Diego has utilized more of his $1,000 on his credit that he's given, it is going to hurt his credit score more than it is Angela, even though she has a bigger balance. And the reason is that he's using 80% of the funding he's been given. So his credit score is going to come down versus Angela is only using 50, still not the goal that we're at. Our goal is only to use 30%, but because she's using a smaller amount, her credit score is going to go up and she's making that minimum payment on time every month. So my suggestion for Diego is next month, try not to use as much of your credit that you have there. And if you continue to do that regularly and you're making your payments on time, his credit score is going to go up. Yes. He could, if they're going to give him more funding, that they don't always do that. And if he were to do that, would they do a
It would
hard?
be a hard inquiry.
Yep. So you just have to think about everything that goes into play on that. Okay, so now next slide, sorry.
That's okay.
Okay, so how do we build credit? Has anybody worked on building their credit before? Yeah,
Awesome.
can you,
That's good to
you
hear.
want to share what you've done?
Your shared loan.
Great.
Awesome.
Yeah, what about you?
Pay my payments on time, usually make more than the monthly payments.
That's great. Yes.
This might not be conventional, but I married my husband, and then he helped me.
Mm-hmm.
Because our loans we did together.
Yep.
And then we just kind of built technically mine.
Perfect. Yeah, that's great. Yes.
Kind of loophole what my mom has me added as a user on
Yep.
Authorized user.
Yep.
I was waiting for that one.
Yep.
started sending the money, she just takes it on.
Mm-hmm.
pays the credit card on time.
You too.
Yeah, that's how I was able to get my first car.
Yep.
Yeah, that's an
My-
excellent way
My
to do
son
so.
just turned 16 and I'm going to be doing that as well as getting him a secured card. That way he can learn. So with the secured card, we'll go over it, but you put $300 down and then you're making payments on that to help build your credit. So start by reviewing it. When you need to sit down before you go and get a credit card, whether it's secured or a line of credit or anything like that, you need to look at your whole financial picture, because that's something that we do not do in this country that we have got to change. We need to look and understand where our money is going, how much is coming in, and how we're spending it. It's really important understanding those wants versus needs. I just told you I have a 16-year-old. He just told me, Mom, Valentine's Day is yesterday. I'm going to take her to dinner. I'm like, who's paying? Because I'm not. I just put money in your account. You just went and bought a teddy bear and a bracelet and all these things. And I can't keep paying for this stuff. So, like having people understand these things and where their money's going. So we had to sit down and look at the checking account so he could see where his money's been going. So start those conversations and understanding things. It needs to start early. But at the same time, understanding our goals, right? What do we want to accomplish? Do we want to pay for college? Do we want to buy a house or a car? Or are we thinking about going on a vacation? We all need vacations. Like, how are we going to save for these things that we want?
Yeah, and another thing to note as well, if you get approved for a credit card, that's great, but look at what the interest rate is. That might not be the best position for you to accept that card. That's why you need to do your homework. What are the rate ranges for those cards? If you have a card that's over 25, 27%, my recommendation would be do not open it. That's just too high of a rate, and it can get you into trouble really quick.
And if you can't pay it off every month, then you probably don't need it. So So how we build it through credit cards. We've talked about that today. Secured credit cards. So it's if you put a deposit of $300 down and then you're making payments on that regularly. And once you graduate from having a secured credit card, typically the financial institution would give you a regular credit card where they've lent you a certain amount, $1,000, that you don't have to put a deposit down, and then you're paying those regularly. So those are secured loans. And a cosigner. So we just talked about that, having your parents, having a spouse add you. I did that with my husband when we got married, as I added him on, and it worked out real well for him with his credit score at 550 and not making payments regularly. And now he's at 845. Like, those make a big difference.
That's a
That
win.
was
That's a
20
win
years
for
ago,
sure.
but yeah, congratulations, John. And then you become an authorized user.
Yep.
Yep. So great work. You all are doing great. So common credit myths. These are things that we hear about, not all the time, but things that we've kind of touched on a little bit today. So closing a credit card will hurt my credit score. So we've talked about that today, and it can take that payment history away. So if you've worked really hard and maybe you struggled paying off credit and things like that, and now you're paying it off and it appears on your credit report and it's benefiting you. If you close that card and that's no longer on your credit report, it can hurt your score. So we're going to go over an example here. So we have Sarah, who's maxed out 3 credit cards. She paid off the first card and decides to close it to get rid of that temptation, right? I get it. It makes sense. But she has 2 credit cards that remain that are maxed out. So if she just closed that credit card that she paid off, all of a sudden that credit history is gone, and creditors look and they see she's got 2 credit cards that are maxed out. So she's not helping herself. That's where I'm a firm believer. Cut up that credit card and just don't use it. Make sure you pull it out of your Apple Wallet. Make sure that you just don't have easy access. I tell people this with not only that, but even with savings accounts, right? If we're trying to save money, it's okay to have multiple financial institutions and make it so that you don't have a debit card. And in order to go get money out of a savings account, you have to physically drive there or take a bus. My husband and I do that, and that is how we save multiple savings accounts. But if I want that one to go buy something for the house or to go on vacation, I have to drive to get it.
And by the time you get there, you're like, maybe I'm changing my mind.
Yeah. Yes.
So for example, like she has 3 cards,
Mhm.
would it be better for her to like do the math and figure out how much she should pay on each card per month rather than focus on one card and try to get that paid off first, I guess?
It's very possible. So I would be looking at your interest on each credit card, right? And how much it's costing every month. I would also, if you're not comfortable looking at the numbers, make sure you're working with a financial institution that can help you. And I'm not just saying this because that's what we do, but honestly, let a professional look at your whole portfolio and what's going on with it. Because what about consolidating all 3 credit cards into one at a lower interest rate that's going to benefit you and hopefully make it so that your payments are more achievable and take
Absolutely.
away some of that stress.
Well, so let's just say you consolidate into a personal loan. So that personal loan would be a closed-end term. So let's just say you did over 36 months. Once that 36 months is over, that trade closes. However, the 3 cards that were paid off are still open. And so then that way, like Jen mentioned, you take that temptation away of wanting to go reuse those cards, but just keep them cut up, or maybe one for an emergency.
And they're going to see that you paid off those credit cards. So that looks good.
And
Right.
typically credit card rates are much higher than a personal loan closed in. So, but like you mentioned, which one do you pay off first? Definitely the higher rate ones. If there's fees associated, you want to look at that first.
Yeah. And then we have Katie, who has 5 accounts open. All of her balances are at 0 or close to 0. And she closes a newer account to avoid annual fees. So that's when, if you're not using a credit card and it has an annual fee. So say you have the Alaska Airlines credit card. I like it because it gets me miles and I can fly on vacation for free. But there's an annual fee. If I'm not using that credit card, and I have to pay $100 every year for it, that's not benefiting me. So that is when you would want to close a credit card. Thank you. that's when you want to close it. So hopefully that makes sense, because otherwise you're paying $100 and it's not doing nothing but showing your credit history. Yeah, you're going to lose that, but you're no longer going to have that $100 fee every year.
And then she's still got the 4 accounts open.
Yeah. So, okay. So negative impact and little impact. And then myth number 2, checking my credit will hurt my credit score. So if you're looking at your credit, it is not going to hurt your credit score. If you are applying for a new credit card, some sort of loan, that hard inquiry is going to be what affects your credit score. So I went to get I told you I was remodeling my house. And so I went to get a home equity line of credit, and anytime I do that, it's affecting my credit score. And I know if I go and open it, it's going to affect my credit score for a little bit of time, not permanently, because I'm going to show that I'm using that credit and I'm paying it off regularly.
Mhm.
Yes.
So I applied for credit card and they did that hard pull. How long before my credit score will readjust after that hit?
The inquiries usually stay on your credit for about 24 months. The inquiry,
Time is full.
correct.
Okay.
But if you start paying on that credit card right away and you're showing you're paying it on time, you're utilizing the credit that's been given to you responsibly, that's going to help your credit score. The pull will still be there, the inquiry is still there, but your credit score should start going up as long as you're
And if you
managing
only-
it appropriately.
Right, and if you only have the 1 pool, it's not going to be impactful. But if you have 12 pools, then that's going to start impacting that.
Yeah,
Yep.
'cause I didn't see when we purchased our house
Mhm.
that, like for the first 30 days, I saw it, but then after that, it went back in.
Yeah, yeah,
Yep.
that's great.
Yep, and that's the way it should work.
Mhm.
Yep, it's a small fraction of time. Soft inquiries, no impact on your credit, like we talked about, opening a checking account, things like that. You're a landlord calling to look at your credit report to see where you're at. Those are soft inquiries and they're not going to affect you. And then hard inquiries, applying for credit in some way, shape, or form. So those are going to be the ones that get you. And then tips for using credit cards wisely. I know we're running out of time, so we'll just wrap up, but I think we've kind of touched on that. It's being responsible, knowing if you're given $1,000 credit to only use 30% of it, make sure you're making your payments on time regularly. And you know where your money's going. If you feel like things are spinning out of control, sit down with somebody and talk to them about that. But it's really important for you to know what you have open. Make sure you're managing your credit report and looking at it regularly so that you don't end up seeing somebody else's name on your credit report and you're able to manage it because it's yours, right? It's your identity. It's your responsibility to work with that.
And, Jen and I are here to answer any questions after. I know we're running very close up on time, but thank you so very much for joining us today. We hope you maybe even just took a little bit out of the lecture today, but please come up and have a conversation with us, and good luck with your credit. And good luck in schooling. We wish you guys nothing but the best. Thank you.
And 2 of our team members will be here next Wednesday too, to talk about auto buying 101. So if you're interested in learning, they're experts in it from Tammy's team, and they'll be able to walk you through that. It's complicated and it's really helps you to be prepared. So thanks for being here.
Thank you so much, everybody. Have a great day. Yes, thank you.